Welcome to the weekly market recap with SC Securities. Let's have a look at some of the latest developments in the Sri Lankan economy and financial markets. The Japan External Trade Organization Colombo, which has been promoting trade and investment between Japan and Sri Lanka since 1964, has released its annual survey on business conditions. This is the 38th edition of the report, which has been tracking Japanese companies operating overseas since 1987. According to the findings, Japanese businesses in Sri Lanka are showing strong signs of recovery with growing optimism for 2025. Nearly half of the Japanese companies expect to turn a profit this year, marking a significant improvement from 2023. By 2025, around 75% of Japanese firms in the country anticipate an increase in operating profits, while only 21% expect no change and just 4% of the firms foresee a decline. Several factors are driving this positive outlook, including rising domestic demand, a stronger sales system in the local market, improved production efficiency, and the lifting of the vehicle import ban. The reduction in container freight rates has also contributed to this growing confidence. While the outlook is promising, Japanese companies continue to face key challenges, including sudden import restrictions, unexpected tax changes, rising fixed cost power outages, and delays in obtaining import licenses and residence visas. The migration of young talent and supply chain risks due to import restrictions were also highlighted as concerns. Despite these challenges, the survey reflects renewed confidence in Sri Lanka's economic recovery, with Japanese business showing strong resilience and optimism for the years ahead. The Executive Board of the International Monetary Fund is set to meet in the coming weeks to assess the third review of Sri Lanka's assistance program. Speaking at the IMF's monthly press briefing, the Director of Communications Department confirmed that following board approval, Sri Lanka will gain access to approximately $333 million. The communications director noted that Sri Lanka's ambitious reform agenda is yielding commendable results, with the economy expanding by 5.5% in the fourth quarter of 2024. Inflation remains well below target, while international reserves have increased to $6.1 billion by the end of the year. The communications director further highlighted that the staff-level agreement reached in November 2024 is subject to board approval. However, she emphasized that this approval is contingent on the Sri Lankan authorities implementing prior actions, including the submission of the 2025 budget in line with the program's agreed parameters. Meanwhile, the President's media division stated that the details of this review are expected to be presented to the IMF Board of Directors by the end of this month. With these developments, all eyes remain on Sri Lanka's ongoing economic recovery and the next steps in its IMF-supported reform program. The Asian Development Bank has reaffirmed its support for Sri Lanka's economic recovery, announcing a $900 million investment pipeline for 2025. The focus will be on key sectors such as power, agriculture, finance, tourism, and skills development, with projects funded through policy-based lending, result-based financing, and investment initiatives. As of January 2025, ADB's active lending portfolio stands at $4 billion across 27 projects. In 2024 alone, the bank approved $808 million for SME finance, power sector reforms, water supply, and fiscal sustainability. With Sri Lanka still facing challenges in accessing global financial markets, ADB remains a key funding partner. The bank is also pushing for public-private partnerships to attract private investments, particularly in infrastructure. Meanwhile, the ADB-funded Port Access Elevated Highway is set to open in the second half of the year. Economists note that while Sri Lanka's growth has exceeded expectations, the 2025 outlook remains cautious, with tourism and financial services expected to drive expansion. ADB has also emphasized the urgency of public sector reforms, particularly in restructuring loss-making state-owned enterprises, linking its assistance to fiscal and governance improvements. With over 12.6 billion US dollars in assistance since 1966, ADB remains a crucial partner in Sri Lanka's path to economic resilience. Speaking at the 26th Presidential Export Awards at the BMICH last Friday, President Andrukumari Dissanayake called on exporters to seize emerging opportunities and drive Sri Lanka's economic recovery through strategic global engagement. He reaffirmed the government's commitment to supporting the export sector, assuring industry leaders that their concern would be addressed. He also invited them to collaborate closely with the government to strengthen the economy. The President emphasized that while the government's role is to create an enabling environment, it is the exporters who must take the lead in rebuilding the nation's economic future. Highlighting the interconnected nature of global trade, he stressed that Sri Lanka must compete strategically for market share rather than adopting aggressive or short-sighted trade policies. With economic stabilization, efforts now laying the foundation for recovery, he stated that the government is ready to assist exporters in capitalizing on these gains for sustainable growth. Acknowledging the challenges faced by the industry, he outlined initiatives to provide technical assistance and enhance product quality. In addition, he highlighted the government's focus on renewable energy, noting that lower electricity costs would improve the long-term competitiveness of Sri Lankan industries. As Sri Lanka navigates its path to economic recovery, the role of exporters remains crucial in driving growth and securing a strong position in global markets. Let's take a look at this week's Treasury-bill auction results. With the recent Treasury-bill auction, the 91-day T-bill rate stands at 7.69%, down by 10 basis points. The 182-day T-bill rate stands at 7.94%, down by 6 basis points. And the 1-year T-bill rate stands at 8.42%, showing down by 1 basis points compared to the previous week. Thank you for watching, and we'll be back next week.